2023 forecast video. What do I think? Where are the signs pointing? I'll give you my opinion starting right now. Hi, I'm Jessica Genung with the Genung team and Active Realty. I am a realtor here in the Temecula Valley. First and foremost, I need to give you a little warning about the housing market and the media. Let this be my first prediction for 2023. You are going to be hit with a lot of negative news about the housing market for at least the next few months. I am going to do my best to explain why this is in this video. Chris borrowed this graphic from a New York Times article about social media. We all know negative news sells, and that is how to best get your attention, and maybe that's even why you're watching this video. My other forecast video goes through 20 predictions that range from a 20% crash to somewhere around plus or minus 5% to basically flat. Check out that video too. For what seems like about a year or so, or several years, depending on who you are following, there is a lot of the housing market sky is falling media out there. These news articles use some pretty old data, in my opinion. The stats and calculations often compare year-over-year home price data. For me, data that is a year old is not particularly relevant to what is happening today. So when December and January sales price numbers start coming in, the media is going to be making a big deal about it because it looks dramatic. It looks more dramatic than it actually is because in January of 2022, prices were still rising rapidly from the unexpected real estate boom and low interest rates. Prices are now decreasing, but at a slower pace compared to those rapid gains of the past few years. This discrepancy is going to look like big news. Let's look at this chart with data from Redfin. This black line is 2022, and as you can see, the prices in Riverside County have been trending down since about June. But the reason we're likely to see even more news articles is this cross point right here where home prices turn negative versus the prior year. Right now, we are about 1% lower in prices from the previous year. This is not really news if you have been watching my monthly market snapshots because we have been declining pretty consistently for the second half of 2022. We have further declines coming from the preliminary December numbers I just pulled in our valley. Okay, Temecula median sales price for a single family home is down to $680,000 in December. It was $689,000 in November. Murrieta came down to $622,000 in December from $647,000 in November. And Menifee came down to $539,000 in December, which was $552,000 in November. So down in all three cities. So the sky is falling, right? I don't think so, and I actually think that this might be a time of buyer opportunity, and I am cautiously optimistic. Yes, if you are buying in this market, it is important to get a good deal because of the recent declines, and there are some really good deals right now out there for buyers. It is not bad at all right now for sellers as well. If they purchased as recently as 2 or 3 years ago, they have still gained a ton of equity. I am not naive to the possibility of a housing market crash. I started in 2009 in this business, and I bought my first home in Murrieta in 2010 for $190,000. That property was purchased brand new by the original owner just 3 years prior to that for $367,000. That is a drop of about 50%, but I don't live in the mindset of the negative and think that the market is always about to crash. The historical likelihood of large crashes like 2008 is low. And quite frankly, I have learned some lessons the hard way by selling when I was not optimistic and also waiting to buy when I was in a negative mindset, which was a mistake. Now I subscribe to the philosophy of buying real estate and waiting versus a waiting for the perfect time to buy strategy. So this leads me to my top 5 reasons I predict the housing market will level in 2023 and then start to increase again. At the end of these reasons, I'll be sharing the opinions of a well-respected real estate expert that I follow regularly. But real quick, if you're finding this video helpful, don't forget to subscribe and like the video. We have been making a new video every week since about mid-2019. Reason number 1, typically recessions and market crashes are not anticipated by a lot of people. They come out of the blue for most people, triggered by unforeseen events. Take 2022, for example, in the stock market. Did you know the S&P 500 suffered its worst year since 2008? In 2022, the S&P 500 lost 19.4%, the NASDAQ fell 33.1%, and the Dow Jones Industrial Average fell 8.8%. For me, these declines could mean a nice opportunity to buy at a discount, although I know it is hard to invest when there is uncertainty. There's a saying that the stock market climbs a wall of worry, and if you wait for the skies to be blue, you will have missed the rally. The same dynamic applies for real estate, in my opinion. Reason number 2, after an unprecedented campaign of rate hikes, Federal Reserve Chairman Jerome Powell has signaled that the central bank will ease up on the rate increases. He says we have a risk management balance to strike. We think slowing down at this point is a good way to balance the risks. Since we were on the brink of a recession in 2022, maybe even a technical recession, depending on who you ask, I agree with this plan to slow down so we don't overcorrect. Reason number 3, mortgage rates are already trending down. They had topped 7% for a while, but the 30-year fixed mortgage rate is back down in the low 6%. A week or two ago, my lenders were quoting high 5s, and let's hope it stays around there or gets better. One other thing to note about mortgage rates, the majority of my clients financing purchase transactions right now are not paying the current high mortgage rates. The real estate market is adjusting to the high rates, and sellers are chipping in to buy down fixed rate loans, or the sellers are chipping in for temporary rate buy down programs such as the 2-1 buy down. This type of assistance to buyers has become quite popular, and builders are also offering all sorts of lower rate incentives such as builder paid rate buy downs via additional closing cost credits, or buying a bulk of funds and offering a lower fixed rate while those funds last. Motivated sellers, they understand the challenges that home buyers are facing with the higher rates, and they're often willing to help. Reason number 4, say we do go into a recession in 2023. Out of the past 9 recessions, only one of these recessions in 2008 did home prices actually come down. As we know, the 2008 recession was actually caused by housing. In the other 8 out of 9 recessions, housing prices went up during and after the recession period. Also, if we go into a recession, my thoughts are that the Fed will lower the interest rates regardless of the inflation numbers. I think they are talking tough now, but if they have to choose between inflation and recession, I think they are going to choose inflation if push comes to shove. One reason for my thought process on this topic was the Bank of England was recently faced with a financial crisis, and they suddenly changed their tune and lowered their rates real quick. Time will tell. Also, the most recent inflation numbers have been showing signs of improvement, which is one reason that mortgage rates have fallen. Mortgage rates historically follow inflation. Reason number 5, we have more new household formations, meaning demand, than we do new supply. Not only are there more new household formations, but we have far less housing supply because sellers aren't listing their homes. More on this in a minute. Let's look at the expert opinion that I mentioned earlier. This is Barry Habib, who I follow pretty regularly. Barry runs a company called MBS Highway that analyzes mortgage and housing market trends, historical data, and makes forecasts. It's a subscription service that a lot of industry professionals subscribe to, and they pay a lot for it. I usually watch his latest free videos on YouTube, and if you have an hour to spare, I will link the latest video down below, which is packed full of good info. I'm going to give you the Cliff Notes version. If you want all the light bulb moment explanations, watch the video, which is backed up by all the data and charts and explanation that your heart could desire. In a nutshell, Barry predicts that inflation peaked in the October-November 2022 timeline, although the recovery will not necessarily be a straight line. So he thinks, inflation is going to continue to come down over the coming months, but we might have an up month followed by a couple more down months. That's what he means by it's not in a straight line. He also says that inflation will be falling over the spring because we are replacing much higher numbers from last year. Again, you are going to have to watch the video for this to clearly be explained in a chart, and it will make sense. He goes on to say that shelter cost data is lagging and that this cost is actually decelerating, which makes up over 30% of the CPI. I think it's about 33%. So this is going to have a downward effect on inflation and help us with the inflation numbers. He also predicts mortgage rates are going to fall to around 5% or even less than that, and his timeline for this is early to the first half of 2023. So this would be good, and you don't hear too many people predicting this, so it will be very interesting to see if this is actually the case. So that is coming up here pretty quick. He also predicts that we will see a recession. His reasons for this, and he's got some great charts and data, is that most people are living off their credit cards and their savings rate has come down a lot, well below pre-COVID levels. Mortgage rates, you got to check out that chart on there. I'll see if I can post it even on this video, but they always come down in a recession. So that is what typically happens in a recession. Your mortgage rates are going to come down. He also predicts that housing affordability is going to greatly improve for purchases, and he also has rents increasing, though, at 8%. Lastly, household net worth, and he's got a really good explanation for where the top 1%, where their net worth is, how much in net worth you have to be in the top 1%. It's about 10 million, how much you have to be in the top 2%, all the way down to the top 50%. And of all those people in the top 50% of net worth throughout our country, 2/3 of their net worth, he says, comes from real estate, from home equity. So do not let the media scare you out of investing in real estate, is his opinion, and I agree. The takeaway is Barry is very optimistic. My prediction for the 2023 real estate market in our area is that we will continue to see some decline for a couple of months, but then start to level as we head into the spring and summer buying season. It's always hard to go out on a limb because I could be wrong, of course, and times are really volatile. And I too get affected by all the negative news, although as I get older, I feel I am better about filtering out that negative noise. So leveling around the summertime, spring, and then start increasing the second half of 2023. So maybe we end 2023, I'm thinking relatively flat, maybe up 1 or 2%. That's my prediction. So what say you? Let me know down below in the comments. I want to know 4 things. Temecula Valley prices will increase or decrease by what percent? The stock market will increase or decrease by how much? Mortgage interest rates will be at what percentage by the end of 2023? And what will the inflation number be at the end of 2023? For the fun of it, let's put our predictions down below in the comments and we'll check and see how we did in a year. All right, thanks for watching. See you next week. Bye.